all jumped in alarm, and they screamed in terror, and some of the little men fell off my arm, fell off my body, right? I tried to loosen the ropes, but they held me down. Although the ropes were very thin, like thread, there were hundreds of them. Finally, I was able to free my left arm. Of course, we're talking about Gulliver, folks. Gulliver's Travels. Gulliver, listen, NVIDIA is a Gulliver of the stock market, and you just heard them say it was tied down for a few sessions, and all eyes are now wondering just how long this mighty giant can actually be held back. It's rebounding here today. Now, here's the thing, though, right? It's been NVIDIA and the rest of the market. So here's NVIDIA. Here's the move that it's made. This is the rest of the market. We're going to call them the Lilliputians. Now, we saw over the last few sessions where they rejoiced, right? Because as NVIDIA was down, they were relevant. They were up. They did pretty well because, of course, this name, this one single name, has dominated the stock market. And this is something that you've never seen before. There's so many ways of expressing this, how amazing this move has been. So this is the largest market cap spreads versus the 200-day moving average ever. Up 98% above the 200-day moving average. Never in the history of the stock market has anything come close. At one point, Cisco was 80%, but the fact of the matter is this is unusual stuff. This is really crazy stuff, right? And, of course, listen, back in the day when Cisco was rocking like this, there was a lot of excitement for a lot of things, but never, ever have I seen the kind of excitement for a single name like this. In fact, back when we had the tech bubble, we didn't have some of the leverage stuff, like some of these fancy trading things. For instance, you can actually trade leveraged NVIDIA, right? And this is crazy. NVDL. So investors put the largest amount of money ever. They put $743 million into this one leverage. This is a leverage thing. And, of course, as soon as they put that money in, the stock got hammered. The biggest three-day decline in the history of the stock market. So we're setting records over and over again with this one particular name. Now, of course, buying the stock and holding it has been a winning recipe for the entire stock market. But it's also masked a few things, right? I mean, look at today's session, for instance. Yes, the S&P is up, but only two other sectors are higher: communication services and technology. The rest of these names are getting absolutely hammered. So my next guest is actually staying away from NVIDIA, but he still loves the AI investment thesis. So let's bring in Infrastructure Capital Management, their CIO, Jay Hatfield. Jay, welcome to the show. Let's talk about this, because you say, okay, you've got NVIDIA, you've got Amazon. You think Amazon is a better value here in terms of an AI play?
Absolutely. We think that the NVIDIA story, as you just proved, is well understood, very strong earnings momentum. But we actually have a 145 target. That's 40 times next year. But if you do 40 times next year for Amazon, you get a much higher price. And it's not a momentum stock, so you don't have those huge drawdowns.
Can Amazon command 40 times?
We think so, because the opportunity they have, everybody keeps obsessing about whether they're going to have more sales than Walmart or not. But what's critical is they can improve their margins by cutting costs. Now they have professional management that has to deliver, and they also have upside from advertising. So not just the cloud service business is what our bullish thesis on Amazon.
But AWS plays a big role in all of this.
Of course, yes.
Yeah. All right, so let's just talk also, because you're identifying the next phase after the picks and shovels will be what companies implement those picks and shovels best, right? We talk NVIDIA being the picks and shovel, indirect AI plays. I noticed on your list, financials. You think financials will be able to implement AI to the point where it actually benefits the stocks?
Some, actually, Jamie Dimon mentioned that, but we really see the AI play a little bit longer term when the IPOs start. You've already seen the private equity. It should be within the next 9 months to a year. The IPOs will start. We'll have an IPO boom. That's going to benefit those investment banks.
So, and most of those IPOs will be AI-related names or biotech names for the most part. That's where we see all the VC money going right now.
Absolutely, right.
They should be well received. They should be exciting. It should be fun times again for some of these key
those are going to be the leaders. Yeah,
Morgan Stanley, Goldman Sachs at the top of the list there.
Right.
I noticed in your note you said avoid Europe, and you said it was cappuccino.
Right.
I like espresso. What's wrong with cappuccino?
Well, they have a clear advantage in cappuccinos. I just got back there. They even serve them on airlines. So I was in Greece. It's booming because of U.S. tourists. But they don't have a significant tech business. They're better regulating tech than producing tech.
Right. What's the old saying? America innovates, China copies, and Europe regulates, or something like that. Yeah.
So even though that's a very cheap market, and they're cutting first, which is bullish, but it's really bullish for the whole the whole world, not just Europe. So we'd stick to the US and benefit from these companies that either are directly in AI or have other upsides.
I mean, let's be honest. These countries have been cheaper for a long time. Right? Almost every January, it's a ritual. All the experts come on the show and tell me you got to buy small caps. Why? Simply because they're cheap. You've got to buy emerging markets. Why? Because they're cheap. You got to buy Europe. Why? Because it's cheap. Sometimes they're cheap for a reason. Let's talk about the S&P 500 because you've actually. I don't have the chart here, do I? Okay. So the S&P 500. Are you looking for? Did you raise your target?
We did. We started at the year at 5,500, and we've raised it now twice to 6,000.
Wow. Now you were 5,500, then you were 5,750, now you're 6,000.
Right.
What motivates those moves?
Well, one of them you already mentioned is the rally is actually, NVIDIA is skyrocketing, but it's broadening out. So Apple, caught a bid, and that's critical to the market.
Well, got two upgrades this morning, including a nice 250 target.
So it's broadening out. So it's not just the chip producers and the cloud service providers. So that's bullish. But more importantly, we're about to enter earnings season.
When you see this, though, when you see this chart here, is this really a healthy market with two sectors up and 9 getting hammered?
No, this is really indicative if it's June, late June, so it's always a bad time for the market. But just think how bullish it is that's not all red. Normally we go down instead of just rotating.
I'm going to take you to Vegas with me. Don't worry, Charlie, you got one chip
By the way, yesterday was the exact opposite of that. So we're rotating but not going down, which is super bullish. About to hit eurnings, and then the liquidity is going to come from the Fed in September. So that's why we're bullish.
Great stuff, Jay.
Great. Thank you.
Thanks for having me on. Thank you very much. NVIDIA. Got to ask you about NVIDIA. It's making a nice bounce today, but it finally showed that a little crack in a veneer, right? A little bit of a crack. We've got the chart here, which I think is a fantastic chart. If it were to resume going down, it wouldn't be unreasonable to think it could go to 100. Are you seeing any put buying on this?
We are. We're seeing put buying at the 96 strike even.
Right.
So, it's a $123 stock, something like that.
Right.
To buy at the 96 level in the relatively short term means people are looking for one more flush. We might not have been out of the woods on this one yet, but I must say, I bet you would too. I'd buy it if it gets to 100.
I think, it wouldn't stay there long, put it that way.
Right.
All right, 20 seconds to go. Yep. This is a big week. We got a lot of things happening, including more inflation data. Volatility pick up going into the weekend?
Volatility picks up into the weekend because of PCE on Friday and because of the reaction to the debate, which, of course, they can only start trading in the pre-market on Friday.
Right.
That'll push volatilities up, I believe. So I'd say, volatility between now and Monday next week, higher.
Huge. My man.
Thank you. Great to see you, Charles.
I definitely think there is going to be a lot of volatility in NVIDIA over the next month or so. Keep in mind that NVIDIA's annual meeting of stockholders is tomorrow, June 26th at 9 a.m. Pacific, 12 p.m. Eastern. And other than the annual meeting of stockholders, I am not aware of any other events prior to NVIDIA's next earnings release, which will likely be sometime in mid to late August. The bounce in NVIDIA's share price today appears likely to be a technical bounce. As you can see here on the 4-hour time frame, we were very oversold at the end of yesterday's session. As I've been saying, I would not be surprised to see softening in NVIDIA's price, possibly lasting into mid to late July. And then after that, I would expect to see a pre-anticipatory run-up in August as we get closer to NVIDIA's next earnings release. But of course, I don't know what the future holds, and I could be completely wrong. Personally, I would consider adding NVIDIA in the range of $98 to $112 per share, and the closer to 98 the better. I think the pullback we've seen over the last few days has been due to multiple factors: large firms rebalancing their portfolios and rotating out of big tech, large firms trimming NVIDIA profits while the stock is near all-time highs, and of course, both the overall market and NVIDIA were very overbought and ripe for a pullback at any moment. It also doesn't help that company insiders, including President and CEO Jensen Huang, have been selling large quantities of shares recently. I want to mention something that was mentioned in Charles's segment because it is very important: the return of the IPO market. As Charles has mentioned many times before, when the IPO market heats up, be careful. I fully expect there to be a slew of overpriced AI IPOs in the future, and all I can say is please be careful. You may remember many internet companies going public during the dot-com bubble that ultimately turned out to be worthless. And more recently, you probably remember the onslaught of overpriced IPOs that Wall Street brought to the market in 2020 and 2021. Many of those companies that went public during that time are far off of their highs, as many of them went public at ridiculously high valuations. So when the IPO market heats up and you see massive waves of AI companies going public, be careful. Wall Street loves to bring companies to the markets at extremely inflated valuations and then dump on the public and use individual investors as exit liquidity. So again, buyer beware when the IPO market heats up again. Back to NVIDIA. We're expecting that the company will start to realize some revenue from Blackwell, their latest generation of chips, before the end of this year. This, coupled with enormous demand for NVIDIA's products from giants like Amazon, Tesla, Microsoft, and Dell have me cautiously optimistic when it comes to NVIDIA's next couple of earnings reports. If they report strong earnings and continue to provide strong forward-looking guidance, then I would suspect that NVIDIA has more room to run. I'd love to hear your thoughts on NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.